Your number one asset in your life is your ability to earn money.
How can we simplify, the top 5 things that people need to do?
You could die, and is your family going to be okay?
Go enjoy your life. Buy whatever you want. It is like you don't need to have like this huge amass of wealth for your adult kids. And we're all middle-aged now. We're all fine.
People say, well, money doesn't matter. Okay, well, give me all your money and try living. See what you can do.
Welcome to the Create Today podcast. I'm your host, Karen Stanley, certified rapid transformational therapist and hypnotherapist. And my passion is helping women heal from the past and learn how to create the life they love one day at a time. And this show is all about how you can do just that. My guest today is Dwight Heck. He is a financial guru extraordinaire. He's a great friend of mine, and he's an author and a father, a grandfather, and a great grandfather. That's so exciting. Dwight, thank you so much for doing this today.
Oh, thanks for inviting me on. I appreciate it. It's been a while since it's been a hot minute since we've communicated.
So it's been so long. So many things have happened. We were just kind of catching up, and I'm in marvel of the last few years, what has happened in the last few years. It's so good to see you and catch up and talk.
Exactly. You too.
Okay. So today I want to talk all about money, and I want to talk about these seemingly complicated financial items. But I want to make it simple. How can we simplify, the top 5 things that people need to do? And I want to start with insurance, because it's just funny. I feel like this is one of the least understood things. Everyone kind of thinks they need to get some life insurance, what kind of insurance, and all the different kinds. And I would love to start there. So,
Sure.
and I
Life
think
insurance is a complicated topic, really, when you
it,
think about it. And that's why
it is
people
or
get
it's not.
scared of it. It is.
It is. Okay, good. Because I feel really stupid.
No, don't feel stupid. It's just, I'll dumb it down as much as I can, but really it's not about the fact that anybody is dumb. We're all ignorant, right? Until we learn and know. Then after the fact, if we don't do, then we're just stupid, right? It's just, I don't understand people, because when you talk about life insurance is actually the foundation for any proper financial planning. And this is, I've been doing this 21 years. And life insurance is the first thing that is communicated. And you talk about the
Why,
different,
though? Sorry,
why?
why is life insurance the foundation of all financial planning?
You could get in your car and you could go drive to the local grocery store. Lots of car accidents and fatalities happen close to your home.
Mhm.
If you are the number one breadwinner for your home, or even if it's a husband and a wife, you need your income to survive. You could die, and is your family going to be okay? Your number one asset in your life is your ability to earn money. And people will go, well, no, my number one asset is my family and this and that. No, we're talking about without money, your family could be decimated.
Most definitely.
In 21 years, I've had families lose both parents in an accident,
Mm.
and 4 kids have to go live with somebody else, and no life insurance. And now the sibling or whoever takes the kids on, adding up more burden, and it hurts their family. It's a spider effect. Like, it
Mhm.
literally, the web gets large. And that is why life insurance is important, because we never know. You could step off a curb, and this may sound funny, but I do know somebody that stepped off a curb, got hit by a bus, right? So at the end of the day, we need to protect our number one asset, and that's the ability to bring in money to support our families. And people say, well, money doesn't matter. Okay, well, give me all your money and try living. See what you can do. So life insurance, if my client only had $1 to spend, and
Mhm.
they said, I want to invest. When I goal set with them, and I break down and I do life coaching with them, and I explain everything like more in detail than what we're going to talk about, obviously, because it gets very personal to their lives. I
Of
talk to them
course.
about their family members. Has anybody died? Has anybody suffered from that death because there wasn't money? You have to make it really personal for people to
Of course.
understand that dollar. If they don't have life insurance, will go toward life insurance before I'll ever go toward investing. And then obviously you can have life insurance that is an investable product. There's different strategies that people use and I utilize for clients called infinite banking. Unfortunately, the common person, the person in the middle class, the person going to work, go home, get paid, maybe break even every month with their income and stuff, they can only afford types of life insurance called term insurance. And
Okay.
people don't realize how many types of life insurance, how many probably, pardon me, insurance products there are. How many people travel without getting travel insurance even, or have critical illness insurance if they, with what happened with John, for an example.
Mhm.
If I don't know if you did, but if you did have critical illness or somebody has critical illness and you have issues like that where you have tragedies happening, like
Yeah.
the tragedy is he didn't pass away, people listening, but the tragedy of him having to have that severe surgery and have his chest pried open, like you mentioned.
Mhm.
You can have types of insurance where you can get, if it gets diagnosed the way by a doctor, where they'll pay you a lump sum of money so that you don't have to worry about working when you go through all that and through recovery. So then guess what? Your family still survives, right?
Mhm.
And that type of insurance is called living insurance, right? So you have death insurance, you have living insurance. People get insurance on their cars and on their homes, but yet that's not their number one asset, though they may think it is, right? It's just
So
not,
true.
right? So I
So,
would highly recommend people, your foundation, if you've ever done financial planning and your financial planner, I'm not here to criticize them. I'm telling you right now, your foundation should always start with life insurance to protect your loved ones.
yeah, good point. Okay, so how do you decide which life insurance, what type of life insurance to get and why?
Okay, well, there's many different types of insurance, life insurance. So the base model, the base, I call it a model, or the base thing that you can get is what's called rental insurance, which is term insurance.
Mhm.
And term insurance is for, so if I'm sitting down with a client and I'm doing budgeting with them and we're trying to get everything that they need in their life, not wants, but needs, and I consider life insurance a need. And we look at the fact, oh, they're making a dollar and they're at $1.20. We have to do some strategies and help them get it below a dollar. And then we put life insurance in there for an example. It would be term insurance because most people can't afford to get anything above that. And what term insurance is, when I say renting it, you can get term products depending on the providers in North America, both US and Canada, that are 5, 10, 15, 20, 30, even 100 years. And what that is basically, if Karen applied for life insurance today, let's say $1 million, and you get approved for it, the term 10 would say, this is what the rate is per month for 10 years, and it's guaranteed. And then what happens after the 10-year period, if you are still medically insurable, we can reapply and you'll get the rate of the day. It's right. It's
Right.
basically there's a rate because they know how many people that are your height, your weight, your race, your gender that are going to pass away within like point zero. It's amazing how the actuaries are able to do this in North America and U.S. and Canada. And again, North America, we're brothers and sisters. We use the same actuarial firms, most of us.
Mhm.
And at the end of the day, if you can't get your life insurance renewed at a lower cost because you have health issues, they have to, all term products that I sell at least are guaranteed renewable, which means they automatically have to give it to you for another 10 years. But what happens then? It's like going up your stairs. If you have a house that has 2 stories and you're going up one step, two step, now you're at one step, first 10 years. Now you go up to the fifth step. That's how it can get up to 5 times more expensive because the insurance industry is allowed to do that because they don't. Now all of a sudden you're more at risk. If
Because you're
you couldn't pass new medical, there's a reason. You don't have to tell them what it is, but they automatically, or if you don't even apply, some people don't even get a hold of me to apply. They just take the uptick in cost. Why, I don't know. Um, does that, hopefully I'm making sense, but
yeah,
that's how it works. The cost gets way more expensive. And
yeah.
if you start out with T20, guess what? The cost stays there for 20 years. And then in the 20th year, it literally goes up 10 steps. So depending on the length and term of insurance that you buy, the uptick for non-medical insurability for it to auto renew, it can be through the roof. And that's why only 2 to 3% of life insurance, of term life insurance in North America ever pays out because most people end up having to cancel it because of that. going up that step,
Wow. Yeah.
right?
Kids, don't wait till you're in your 60s and you have an open heart surgery to try to get life insurance.
And you know what? There's even product that, and I feel your pain. There's even products out there. We have two different companies, one in the US, one in Canada, that literally will insure people um, no matter what they've gone through. And they put what's called, they'll put exclusions in there though.
Hmm.
So that they'll insure you outside of, let's say you had cancer and you recovered from it.
Hmm.
They'll insure you outside, they'll insure you for everything else but reoccurring cancer of any type,
Yes.
right? So it may not be the best, but
Right.
it can still give people peace of mind and take away that quiet desperation and beating themselves up for not getting life insurance.
Yeah.
The issue is the standard middle class cannot afford that kind of insurance.
Right.
It's not going to
We
happen.
can get insurance. They'll insure him. If I wanted to get another policy right now, we looked into it. Like it's insane money. I mean, it doesn't make any sense to do it, but that's why you do it younger. That's why you need Dwight. You need to do it
Absolutely. Like
when you're younger.
I look when my son, I'll use my son as an example. He was 19 years old and I sat him down because he had heard me. He's been watched me do webinar, like stand in front of crowds and do workshops. He's listened to me since he was little.
Right.
And I said, he got turned 19. I said, okay, we got to sit down. He had got his first real job where he's making some good money. We got a budget. And I said, we're going to goal set. Here's a sheet. Let's go over it. Okay, what goals? Okay. And then we discussed it. I treat him like a client.
Mhm.
Obviously, I know things about him I wouldn't know about with a client. And we put life insurance in place on him along with critical illness. So that critical illness insurance is it can be a rider on term insurance, it could be a rider on whole life or universal life, which is other insurance we can talk about.
Mhm.
But it literally he's covered if he gets like a heart attack or because it happens with young people or he gets cancer or he gets one of 25 covered conditions, which are the most that happen right in the
Mhm.
medical industry. There's 25 covered conditions. He'll get $100,000 given to him while he's going through recovery, right?
Right.
And to help him survive. And then his life insurance, he's got $500,000, but both of them together are like 50 some dollars a month at 19 years of age. Well, now he's 25, right?
Wow.
and
20.
and and eventually you can just sort of for people listening, if as long as you buy the right product, the right term product, you can also convert them into um, cash-based insurance policies called universal life or whole life. You can convert them without medical insurability. There's a timeline on these policies.
Mhm.
They'll say, okay, you get it today. 20 years out, you have to do it by now, or 30 years out, here's your deadline. And they know,
Mhm.
and the insurance companies notify you and say, hey, I just had one here recently for a client. Your convertibility option is coming up at the end of 2024. And right. So there's different options.
Mhm.
People at one time you didn't when I first got into this industry, we didn't have as many options, right?
Right.
But the industry is maturing and adapting to the consumer, which is a good thing.
It is a good thing. So, could you please explain the difference between universal and whole life insurance? What's the difference?
Sure. Well, the biggest difference between the two, and again, there is different aspects. So I'm going to generalize it because there's different
Okay.
types of universal life. There's different
Okay.
types of whole life that have different because they have different options. It's just like
Yeah.
obviously you'd understand because of the car industry, somebody can come in and they order a vehicle. You have an option sheet, right?
True.
You can order what you want or buy off the lot, whatever. But you know what I mean?
True.
To make it easier for people to understand, you have a base model of UL and then you can add things to it. You have a base model of whole life, you can add to it. So the biggest thing to introduce permanent insurance or what's called cash-based insurance, they both have an insurance portion to it. So let's think about that term policy. We'll use $500,000. That term policy has $500,000 and protects you, your loved ones. And then on the permanent side, when you go get universal life or whole life, you can still have that 500,000. But now that 500,000, it starts out as a little seed, like an orange seed. And you have the ability now to invest money into it on top of the cost of insurance. So the insurance has a cost,
Mhm.
let's say it's $50, and you decide along with your insurance advisor, you put a timeline on when you want to have to stop paying on the policy, where it'll self-fund itself, where it'll
Mhm.
have ability to pay for the cost of insurance itself. You'll have a timeline on that. And that timeline will say, okay, well, you got to put $400 in a month. So your insurance is 50, you're putting an extra 350 in a month. And that's going to be the water that's going to water that seed. Eventually, that seed's going to become an orange. That orange, the outside peel is your term insurance, that $500,000, and your cash inside is the inside goodness. And
Mm,
the orange gets bigger and bigger and bigger as the investment increases,
mm,
right? So that orange itself, all of a sudden, now you're 65 and you're retired and you don't want to make that payment anymore. If it's done correctly and it's started soon enough,
mm,
obviously, UL, the investment has an investment portion. Whole life has what's called dividends, and usually that's paid out by the insurance industry. You don't necessarily pick an investment. So the differences between the two separate right there. UL, you literally can pick the investment. There's different investment choices that you can pick. In Canada, that could be bonds, can be T-bills, and
mm.
in states can be CDs. It can be different types of investments. There can be mutual funds within inside of that and that
Okay.
UL. And obviously, you want to make sure that it's based on your risk tolerance. So I will
Mm,
reaffirm that to people. Your risk tolerance is what are you willing to take? How much money are you willing to
yeah.
have your money go up and down? Do you want it to be like a little ticker, a little up and down, or do you want it to be, are you able to take more risk and it be a roller coaster? So that can affect how your policies
Yeah.
perform on
Well, that's an
universal life,
excellent point. And
right?
I think your risk taking changes as you get older and you have different things and you have different priorities. And maybe you've had health things, and as you get older, like things change. And so,
That's why you need a planner. That's why you need somebody that's going to sit down and
yeah,
not a robo advisor. You can go buy
yeah,
products online. You don't, the
right.
problem is they don't get to know you. They're your family.
Very.
They don't become your friend. They don't necessarily are able to give you vulnerability of, like, for me, what my family's gone through or what my clients are gone through. Like, obviously I don't use clients names, but XYZ client has gone through this. I understand, and this is how we dealt with it. You can't a robo advisor or somebody online that's selling life insurance of any type cannot empathize with you.
And that's not
They just
necessarily
can't.
what's best for you based on your specific circumstances and in this specific stage of your life, whatever stage that is.
That's exactly it. So the difference is, again, between UL and whole life, they both are a permanent product. They both have a cost of insurance, and they both have a portion of money based on what your timeline is for how long you're going to have the policy,
Okay.
um, where you invest in it. Because they're permanent policies. The reason permanent is in there is because they're for life. And people say, well, what do I need life insurance for life? And I'll tell you this, we can go into more details on UL and whole life, but at the end of the day, why you need permanent insurance is because you have different aspects and seasons of your life. So let's say you have a house and we figure out the value of what your life insurance is. Your house value, we'll figure out and add that as part of the value. I use a simple process is dime, right? Dime is literally, it's talking about what your income is. It's talking about your debt. It's talking about education. It's talking about your mortgage. And then we'll say, okay, well, this is how much insurance you need. Here's the multiplier of the insurance that you need. And yes, we can actually stagger insurance. You can actually say, well, okay, well, you need $3 million of insurance until your house is paid off. And then we can have this ladder effect where it goes down the opposite way and drops off the value of what your house mortgage would have been. Most people don't do it because at the end of the day, that's extra money for
Right.
estate planning
Right.
for their loved one or significant other. Let's say the loved ones, they're both surviving. Like my parents, I'll use them as example. My parents, if in their 80s are both alive, if they have permanent insurance and all those other aspects of mortgages or debt or education for all their kids are all growing up and we've all done our own things. Now that is complete estate planning for when they pass away. That is a way for them to give tax-free money to myself, right?
Mm.
And then they can literally spend their retirement. I have so many people I sit down with, Karen, would blow your mind, that'll say to me, well, why are you wrote these goals down? Why don't you do some of them? You have the money, we can help you figure it out. Well, we got to leave something to our kids. Sad. Why can't you do both? Oh, let's
It's
wait a minute. You've had terrible planning, or you've never had anybody even try to plan with you, or you've never sought it out, or you had a bad planner. and then you got butt hurt and decided you didn't trust anybody. Doesn't that happen with a lot of aspects in life,
Yes.
right?
100.
Somebody hurts us once and we're not willing to get up, put a band-aid on the boo-boo and move forward.
It's so true. And then we have a solidified belief that is not service. And we
Yeah.
might hang on to that solidified belief forever. Then we're just hurting ourselves by doing that. That's really interesting because I tell my dad all the time, he did not have a financial planner or do any, I don't think that he planned and he tells us, I mean, we know, I mean, he had a lot of debt and he had 11 children. But what he did have is he joined the United States Air Force in 1961. And so he has permanent, um, retirement. He gets a check every single month for the rest of his life. It's a pretty big one. And I'm like, it's the first time he's ever had money in his entire life. Now that his youngest is 36, I always joke with him. And I'm like, don't save it, spend it, go do whatever you want. And he's 87 years old. You don't need to leave tons of money. You've been broke supporting your family your entire life. 5 cars in the driveway at all times. One of them's always in the shop getting repaired. It's just like, go enjoy your life. Buy whatever you want. It is like you don't need to have like this huge amass of wealth for your adult kids. And we're all middle aged now. We're all fine. You know what I mean? Like it's at some point,
Yeah, of course.
spend it. Whatever. What do you want to do? Do you want to go travel? Do you want to go see something? Like he's stressing out about buying a used Ford. Oh, he did. He bought a pickup truck, but he did not want a brand new one. He's like, this is probably my last vehicle. He probably is. He's 87. And he's like, I don't want a new one. I'm like, why? Get whatever you want. Have fun.
That's just
Like
it
you don't
sounds
at
like
that point, you don't
that
need
generation's that way though, aren't they?
so
That generation's that way. My parents are both 83 and
uh
my dad will buy going into like we'll use Walmart example. He'll buy the cheapest thing he can possibly buy. And if he's going to buy something for his kids or grandkids, he goes all out. But for himself, you know what I mean? It's just like, Dad, you're 83, mom's 83. Why don't you, they've been talking
whatever it
about
is.
renovating their bathroom for 15 years. And they live in a
Don't
small
want to
little
spend the money.
bungalow. He was a very successful entrepreneur, business owner. It's not that he can't afford it. He just can't, but he was one of 18 kids, though, to be
Yep.
fair, right?
That's right.
My mom was one of nine. So they literally still have that depression mindset. And no matter what I do, I can't get past him. Yet I've been his financial planner. I took over, I'd say 80% of his stuff. He's still secretive about some stuff, and that's fine. Good for him.
Uh-huh. Yep.
Right. But about 80% of his stuff I took over and I've been doing for the last 21 years. My parents are set. They really are in a sense of estate planning or being able to go and buy a truck.
You could probably
Right. They
buy
just
anything they wanted.
but my dad will look at used
Don't want
stuff.
to.
He'll go to a garage sale or an auction and buy stuff. And I
Mhm.
love my father, but even at his peak in business, he'd go to auctions and buy bent nails and straighten them and buy used wood and use it to build sheds for us. He did one of my places. He built this two different sheds,
This is
used lumber, bent nails, straight because he grew up in that era. That again, part of it's
yeah.
smart though, because
Part of it's
reduce, reuse, recycle.
amazing. Yes.
But some of it's just you can't get past that mentality. What happens if I don't have food tomorrow? What happens if I don't have money?
Right.
Right? And
It's
that's
and he just along that same line is that he bought his last truck was a salvage title. And I'm like, oi, Dad, I love you. And yes, it's cheaper because it's salvage title, but it's a salvage title for a reason. It's going to have problems. That means you will have nothing but problems. I'm sorry if anybody loves buying a salvage title, great, but there are just going to be so many problems. And it's just nothing
you
but
better be
problems.
a mechanic. You better be a
Exactly.
mechanic or a body man or something like
Yes.
that. Because both my brother-in-laws have bought salvage vehicles. One's a mechanical guy
There you
and the
go.
other one's a body man. But the amount of hours they invest.
Yeah.
See, people listening, quit devaluing your time.
I know.
Time is gonna go whether you like it or not. You can't control it. You don't know if your tickets, I could get off this call and one of us could pass away.
100%.
So enjoy the moment, carpe
I
diem,
know.
right?
Well, and then like, and on that same point, like if you love working on cars and that's your favorite thing to do in the whole world, well, of course, keep buying
Perfect.
salvaged out. Great. That's what you love. But if you don't love fixing them, then, perhaps don't get a cell phone.
100%, 100%. Like my brother-in-law is he's going to be 65 next
Yeah,
year and hitting retirement. He loves it. He's got a big
absolutely.
shop. Great. That's his hobby. That's because he does it for a living, but he also does it as a hobby, a body person. And at the end of the day, other people I know though that they take up their garage, they take up their evenings with their instead of spending it with family or creating memories, and they're in their garage trying to fix their broken down vehicle because they bought something that they shouldn't have bought. They devalued their ability to use their time for things, in my opinion, that are
Mm,
more important than fixing a vehicle.
say that
Change,
again. Devaluing that. Say that again. That was really important.
They devalue the ability to create memories, right?
Yes.
They devalue their time and the ability to create memories. And for me, everything I do, I'd say now for at least, honestly, it's going to be probably 20, the whole time I've been doing what I do. When I left as a computer consultant in the IT industry and getting into finance, everything for me started to revolve around looking at my clients and my life. And am I using my time? Am I valuing it properly? Like I'd be the person that, oh, okay, I'll do an oil change. Forget it. I'm not going to pay. I'd rather pay somebody that. And I look at it this way, Karen. I'm paying that person to change my oil at the local dealership or whatever to do things that maybe I can do. And maybe it takes me 2 hours. I'm not saying oil change, but anything in general it takes me 2, 3 hours. That takes where if I get them to do it, I'm good for the economy. I'm helping their family. I'm helping that business. And I'm helping me because I capture my time to do other things for me that I find are more valuable. Now, if it's not your cup of tea in your wheelhouse and you have to do your oil changes and that's your thing and you get excited about it, great. I wasn't excited about it. I was doing it to chase pennies,
Yep.
chasing pennies to lose time. I don't chase pennies now. I do everything in my power to value my time to create more memories, right? Because I just had somebody again. One of my friends passed away here. I did a
Mm,
eulogy at his funeral in May, and quite a bit older than me. I'm 57 next month. He's 71. We became good friends when I was in the computer industry. He wasn't expecting to punch his ticket. And all of a sudden, he had a heart attack and died. Guess what? A friend of mine, since 1998, we had been friends. I tried everything to do financial planning with this man and I couldn't get through to him. So he left his wife behind now to deal with all the devastation of lack of planning.
mm,
Right? And I tell people that because you need to understand. And if you're that person that says to me, well, that's their problem, I'll be gone. Get out of my face. You're not in my tribe. I don't want to hear from you. You're a selfish person. I'm sorry. I am trying to offend you because
mm,
you should be worrying about your family and what happens if something happens to you to make
100%.
sure that they survive. Right. I even had somebody here in the last few years say to me, well, my wife's new husband or new boyfriend can take care of her. And I looked at him and I said, are you serious? Are you joking, right? No, I'm dead serious. I just like, we can't work together.
Nope.
I did. And I walked away from that conversation. I can't work with people like that. You
No.
have to be like minded in order for me to be able to really become heart centered to you and to me, because my business and financial planning isn't about just numbers, it's about connection. Financial planning, life insurance, any of that stuff is the after effect of building a relationship, getting to know you so that I value what is true to you and
Right.
make sure that you're spending your finances to do that stuff in the most effective way. Right? It can be to help you learn how to save for a holiday because maybe you've gone on vacation, and you go on vacation for a couple of weeks and you spend the next 2 years paying it off on a credit card. Then you do it another 2 years. And I see clients like that are people that trade in their vehicles because they have too many repairs on it and they take the current loan and wrap it into the new loan and they just create themselves a perpetual motion of heartache.
Yeah.
And there's ways around it.
Right.
It's called conversation, vulnerability, and just be true to yourself. What do you really want? And maybe you don't know.
Right.
That's why everything with me starts out with goal setting. I need to know what you want.
Well, it's so true. And you have to have personal responsibility. I mean, you have to actually I am responsible for my family. And not forever. I mean, if my kids were all in their 50s, if my kids were my age, well, I'd be like, like I'm telling my dad, spend your money. We don't need it. You don't need to take care of us anymore. You've done enough. You've paid for enough. Like we don't let my dad pay for anything anymore. And but also for me, well, mine are 18 and 21. And like for the example, everybody's circumstances are different depending on whatever situation you are in life. Like I lease my vehicle through my business as a business expense. That makes total sense for me and my family. That would not make sense for every single person, in the entire world.
Exactly.
Right? It depends on everything. So that's why it's so personal.
You got
Um,
to know the whole picture.
whole
Absolutely.
picture. Yeah.
Yeah,
Hey, what works for me is not going to work for everybody. And
exactly. Like our fingerprint, everybody's fingerprint's unique.
yep.
I have no two clients that are like, and people will say, "Oh, I must be the same as." No, you're not.
Mm-mm.
There's similarities, there's commonalities, but you're unique. Never take that away from yourself and tell yourself that negative thought that you're the same as everybody else.
Right.
That's the problem with our society today, is everybody's been pigeonholed into a mold of what they should be or how they should act or what should they
Mm.
should expect. You can be way more than that. You just got to believe in yourself and find somebody that believes in you too.
100%. We could have an entire episode about that. I want to know, I didn't even think of this question until just now. Is the 401k, is it exactly the same in Canada? How is that
Ours,
different?
ours, ours
Yes.
is called the RRSP, Registered
Oh,
Retirement Savings Plan. They're so similar and common. It's not even funny.
really?
There is some differences, but the 401k is, it's a trap, in my opinion, just
Mm,
like the RRSP is a trap.
mhm.
Now, the 401k and the RRSP can work great for people that are wealthy because everybody understanding that listening to this, give you a little education about investing. If you think a mutual fund is great, do you understand the pros and cons of it? Do you understand what a stock is? Do you understand all that stuff? But those products can go into a 401k. They can go into, for Americans, it can go into an IROth. It can go in, you know what I mean? Like, so those are investment vehicles. A 401k, or in Canada, an RRSP, is literally an investment vehicle, meaning you can put all these different investments in there, stocks, bonds, mutual funds, etc., inside of these vehicles, and then they all have different tax consequences. They all have different
Right.
ticking time bombs, right? They really do, as to
Right.
what's going to happen throughout the life of that investment vehicle and the investments within inside it. So the 401k and the RSP, they are designed, when they first come out, they were designed to help the consumer out when life expectancy wasn't as high as it is either, right? So, well, for an example, at one point in time, you think about it, back in the 50s and the 60s, when a lot of these products were created and refined, people's life expectancy was late 60s. It wasn't very long. It was shortly
Wow.
after retirement. So the government loved it. They thought, okay, whatever, we'll give you a tax break, right, on you investing your money. We'll defer the taxes you're going to pay until you take the money out, right?
Hmm.
And then these products are 100% taxable when you take the money out. Like, the pitfalls of them aren't great. Americans, there's better products to utilize, um, uh, that will allow you to invest with your after tax dollars. It'll grow tax free and you can take it out tax free. We have both. We have those products. Ours is a little bit better than it is in the US. Ours is a TFSA. Um, Tax-free savings account, but they limit how much you can put into it. But again, just like you talked about life insurance, you got to start as soon as possible, start young, because
Somewhere.
the compounding effect of life is happening with your age, it's happening with your investments, it's happening with everything.
Right.
Start sooner. But great question. There's different products, there's different services that you need to understand and be educated on, and then actually challenge the person you're dealing with and say, like, I do it on an 8.5 by 11 piece of paper, and I write
Mm.
it out if I'm sitting with somebody. If I do it on a Zoom call, because I have clients that don't. I have clients that live 15 hours away from me, and in a different province that I deal with, and I do everything online. And I literally teach them the history, of investing to understand what a stock is. Like
Hmm.
most people don't even know. They think they know, they don't.
I know.
What is a stock? What's a mutual fund? What's portfolio management? They don't understand exactly what it is that they're getting into for, again, for 401k, an IROth, the list goes on. There's different vehicles of taxation that you can put the investment in. Question: what are the pros and cons of this? And if you ever deal with somebody and make you feel icky, they make you feel like you're, well, why are you asking that? Get up, thank you for your time, and go find somebody else.
Trust your gut.
Yes, get a second opinion, just like you should
Yes.
medically. Like,
Yes.
honestly, it breaks my heart when I sit down and I get clients referred to me that are in, months away or year, 2, 3 years away from retirement, and they lay out all their stuff. Karen and I do an analysis with them and a goal set. They tell me what they want in retirement, and I crunch all the numbers and have to tell them, sorry, you can't retire, or you got to get rid of a bunch of things you want.
Mm, yeah, no one wants that. No one wants that.
It happens
Just
more than
set
you think.
yourself up so that you can enjoy the last 20 years of your life. And I just want that so badly for everybody. Um, okay. I know we could go on forever and ever and ever. Let's just wrap this up with the two most important things that everybody needs to do and to improve their finances at any age. What's the most important? So you think life insurance is the most important is number one.
Well, that's life insurance would be the number one
Number one. Okay.
product, the number
Okay.
one product in financial
Okay.
planning. But in the process of dealing with people, the number one thing to do at any stage of life is to learn how to understand what you want and budget,
Hmm.
because no matter what, the number one product you need to start out with, and part of the or in the financial planning process is life insurance. But leading up to it, the number two things you need to do is goal set and understand budgeting, and understand the difference between within that budgeting structure what a need and a want is. I started teaching
Yeah.
my kids that when they were old enough to talk, and
Mhm.
understanding, well, Dad, we need this. Well, guess what?
Hmm.
I got to look at the budget. Oh, here, come over here. See this? This is a struggling month for us. What's that right there, Dad? Oh, that means we're going to be negative because we had some extra expenses happen this month. So what you're asking me for is a want. Or in the next time it might be, you know what? You're right. You need that for your extracurricular. You need that for whatever, something blew a
Mhm.
hole in a runners or whatever. That's a
Yeah.
want. So we'll put that on there. We'll understand the fact that yes, it's going to be on a credit card, but I'm also going to be smart enough to know that next month I'm going to have surplus and I'm going to pay it off. So it's a temporary ouch, but I understand that ouch and can control it through budgeting. So the
Mhm.
biggest thing about financial planning that is skipped is people need to be sat down and said, hey, let's go through your numbers. Quit using an envelope to write down all your expenses and miss all these other things, right? You're missing too many things. Well, why do I have to put haircuts in my budget? Well, do you pay for them? I know I don't, but anyway, at the end of the day,
Lucky.
at the end of the day, do you pay for your haircuts? Yes. Well, what bank account does it come out of? The same as everything else. And they'll
Yeah.
say it like that. Okay. So then you understand why it needs to be put on there. And how often do you get your hair cut? Every 3 months. So I have a spreadsheet, the same one. I've had it revised a couple of times. It's the
Huh?
same one I started out with 21 years ago on Excel. I don't
So
use
cool.
fancy programs. I keep it very basic. And we literally go through a budgeting process and I apply their goals to it. I have a part of the budget. Oh, you want to be able to have a paid off vacation. We add all those stuff up. We put in what they think, and then they put their income in and they see the shortfall that they're going to have, and they'll go, oh,
Crap.
okay, so let's go through all the stuff we just detailed and let's figure out what's a need and a want. And I
Yep.
ask them, what do you think this is? And I educate them. I make them finally do something they haven't done in regards to
Mhm.
money, critically think
Mhm.
and apply it to their goals of what they want. And it's a process. This is
Right.
a life journey. I'm not looking
Right.
for a transactional client. I'm looking for a relationship client that I'm going to help them along their life journey. All of a sudden, they call me up. I have a couple this week. We got this going on. People are still suffering after the pandemic and the corruption, and it caused us all to suffer, our
Mhm.
businesses, our lives. And they literally call me up and say, hey, we can't necessarily see the forest for the trees. You can. You can be objective to our circumstance. This is
Mhm.
what we're looking at doing. Here's our budget. You know our budget. Let's go through it. What can we do? What do you see? Sometimes I can give them hope. Sometimes I have to be, you know what? Unfortunately, you can't do it. Or what are you willing to sacrifice to get that?
Mm-hmm.
Making people make that decision themselves. Because if you force to make the decision yourself about your finances and your life, you literally avoid something I talk about in my book, quiet desperation. You avoid that by understanding the power of numbers. It doesn't mean that you're still not in a clutch in a tough situation,
A rough
but you know
patch.
that there's a way. Yeah, you know there's a way out because you have
Yeah.
some direction and focus. So that would be the first two things that I'd always focus on. And then the first product I'd focus on would be insurance.
And I really, just to reinforce that, I think that's really smart in anything that we're doing. All of us, this is finances are always going to ebb and flow, and the market's going to go up and down, and crazy shit happens. Election year right now in the U.S. There are just all of your financial wealth and taking care of your family. It's always in an influx. It's all for all of us. It's a lifelong journey. So just taking a look at it as much as possible, like you're doing, like looking at everything that's going out and what's coming in and all of your goals. And, it needs to be like all the time. You can't just look at it once every 10 years.
You need to put an effort. You need to, there's people put statistically, people put more effort, Karen, into planning their vacations than they do their financial
Mm.
life and what they want to accomplish for themselves individually, then their
Yeah.
family and their kids,
Oh,
even
I'm
your
guilty of
kids who
that.
are, right? Even your kids,
Oh, yeah.
like you said, you kids get to an age where you don't necessarily need to help them per se. I'm
Mhm.
still helping my kids, right? Depending
Okay.
on which one there is. I'm not
Yeah.
saying a person should or shouldn't, but I also am planning if I died tomorrow, how am I helping them? I
Right.
also have my living legacy is happening and creating as I live. It doesn't mean people look back at him, oh, look at the legacy, what he did. No, I'm in
Mm.
session right now with my family
Mm.
and my life, and what am I doing to plan for that, to protect them if something happens to me. Not taking away from me living good today, though. I'm not going to be that person that's not going to go on that holiday in case my kids need it. I'm sorry, right? I'm
Right.
still I'm going to figure a way of hopefully doing both. And if
Yes.
today I can't do both, well, then I have to delay something. I have to be willing to look at it and be truthful to myself. Be truthful to
Yeah.
yourself, people. What do you really want? Are you taking care of your needs
Yeah.
before you take care of everybody else's?
Well, and I think about, my journey. Well, I had years where I didn't have two nickels to rub together. And I was a single mom after the last crash and all of that. That's not all circumstantial. I wasn't really a victim. I mean, there's a lot of bad circumstances, but I also did not have any plan. I didn't have any savings. I was a mess. I was a complete mess. So most of my mess was my fault. And when I look back at that, I was like, wow, I have many people that helped me, So on the same vein, where I say, Dad, go spend your money right now, I also want to be the parent that'll help my 30-year-old daughter if she goes through something like that, if she needs help, like I'm in. Like, I want to make sure that I can help because you never know what's going to happen. You all may need to help your kids when they're in their 20s or 30s or whatever. And I just
Absolutely.
feel so good to be able to, and it feels so desperate not to be able to. Yeah.
Well, that's back to that quiet desperation. Then you feel guilt. Then
Yes.
you live in a life of worry. Then all of a sudden it affects your health. Then all of a sudden you're going to a doctor and you're weak. Your mind is weak and not strong, and they become. I'm not saying all prescriptions are bad, but a lot of times people get given prescriptions for things to handle their emotional and mental health when really in reality, if they started at the root of planning in their lives and surrounded themselves with the right people, they wouldn't need to have those drugs.
So
You know
true.
what I mean? Doesn't mean they have somebody they can talk to. Obviously, there's people out there that do need prescription
Of
drugs
course.
that they can't just talk to a psychologist or to a friend or their circle of group of people in there that help and support them. There's always there's always ebbs and flows, like you said. There's always things outside of the norm. But
Yeah.
a lot of times when you get into that financial pressure, it causes health issues. You can't help somebody,
Sure.
you feel guilty. Oh, I put myself first over my kids. Well, no, if you look at it differently, right?
Yeah.
If you're not healthy and you're not sound, maybe today you can't help your kids, And you have to say no, because I have had to in the past, right?
Mhm.
Sorry, I can't help you. I got to worry about me, because if I don't worry about me, I'm not going to be around to help you the next time after
Yes.
this. You know what I mean?
Yes.
So start taking care of yourself. Planning life is not hard. It is really easy.
Mhm.
It's difficult only because we make it difficult, or our family or friends or associations make us feel bad about things, or society, we follow too much social media, we watch the wrong TV shows, we listen to the wrong podcasts.
The news.
Right? You're all you're listening to is true crime podcasts. You're gonna, what are you getting? What are you feeding your
Mm.
brain?
Yeah. Or you're watching the news, you're watching propaganda
Yeah,
24/7. You actually, if you believe that's
absolutely.
true, you will be sick soon. And it's not
So
funny. It's not funny to me at all, but everything that you're watching does affect your health. And I don't think a lot of people put the connection together.
you're right. They don't.
Yeah. Oh man, thank you so much. This has been awesome. Thank you. I didn't even have any questions prepared. I was just thinking about it. I was like, what are some of the financial things that we could talk about that would help people the most? And I think that it was just so great what you shared. And thank you so much for taking the time to share your expertise. How can people find you?
Easiest way to find me is go to my website, giveaheck.com. Everything's in there in regards to my coaching, my financial practice, because I do coach people. I may not be able to help offer you a product or a service within where you live in the world, but I can help you through the budgeting. I can help you through the goal setting.
Mm,
I can be that mentor for you to deal with somebody local that you find to ensure that you're treated properly. So I do that as well.
fantastic.
Yeah, my podcast information's on there, stuff about my book, but it's a one-stop shop, giveaheck.com. And yeah, reach out. You can book a free call where we can jump on a
Consultation.
Zoom call and just have a conversation. And I'll be
Love it.
bluntly honest with you. Anybody that knows me, I'll be blunt with you. I'm not going to be
Oh, great.
hurtful, but I'll be
Oh,
blunt with you, whether or not I can help you, whether or not, I have calls with people that think their lives are a disaster and they got their stuff together, but nobody's ever told them, congratulations, you're doing really good.
both equally as important. And as you know, so thank you so much, Dwight. I really appreciate it.
You're welcome. Thanks for having me on, Karen.
Thank you for being here and listening to my show. If you got any value at all, it would mean the world if you shared it and left a review. Remember, the only way to create the life you love is to take it one day at a time. Create today. God bless you.